Hello and welcome to another episode of my company health check series. As you know, I haven't been posting for quite a while because of the uh, recent quietness and downtrend in the market. But currently, it's now earning season again. So, earning season has just started last week, and the one being the very latest one I got hold of last week was American Express quarter three 2023 earnings results. So what is my company health check series? Here I will share occasional updates on my portfolio companies I invested in, and I will analyze them using the bottom-up approach, usually looking at the quarterly reports all the way to the full year and beyond. Apart from that, I also like to journal my research in video format, as I hope that I can make myself more informed of my past decisions, whether it's right or wrong. Okay, and also share my insights with everyone here. Hopefully, all of us can benefit in some way, especially to my fellow value investors like myself. So for more information on why I invested in American Express, you can watch my previous video episode about American Express, because here I will just be talking about its latest quarter three 2023 earnings. So as I mentioned, today we will be looking at in detail a deep dive of American Express third quarter 2023 results release. So we now look at AXP, I mean American Express, or AXP for short. It's segmented revenues. And if you look at their segmented revenues this quarter, okay, I noted very good improvement in terms of their quarter three 2023 segmented revenues. Okay, and if we look at its individual segmented sales numbers for quarter three versus quarter two 2023, we see that all segments make very good increase in its revenues, except for the global merchant network business, which had declined a little bit. And if we compare quarter three 2023's earnings to revenues to previous year's quarter three 2022 results, then we see that typically quarter three for American Express tend to be better in its performance, because likewise quarter three last year was also quite a good base to come up off. Okay, so uh, if we make this comparison year on year, then we will see muted growth in most segments, and negative growth in the commercial services segment. So if you looked at, that means if you looked at quarter two versus to this year's quarter three, you see very good results. But if you looked at quarter three 2023 versus quarter three 2022, there's still good improvements, but it's just that it's lower in terms of growth. Because of their stellar quarter three revenue performance, I also have adjusted my previous conservative estimate from a negative growth to a positive growth for the last quarter, for the final quarter and its full year. So I make a revision of its full year revenue growth to at least 10%. So this makes American Express business performance a standout when compared to its share price performance, which performed poorly throughout this year. And if you looked at American Express net interest income have also improved quarter on quarter, with strong growth in most segments. If we compare this to quarter three 2023 and quarter two 2023, net interest income have also outperformed if we compare its year-on-year growth. So both quarter three 2023 versus quarter two 2022 and quarter three 2023 and versus quarter two 2023, all of it is very consistent. Its growth have been very strong in terms of its net interest income. So we see that all segments reflected super strong growth, bringing it to a total of 20% growth in net interest income year on year. However, when we look at this chart on total network volume growth, you can see that growth compared to last quarter look flattish. The reason is because average spending per card is flattening out as the quarters cut off on particular days. They make a cause for a drop in spending and in turn affect network volumes and transactional volumes. Okay, we now look at Visa as a competitor to American Express to find out how a peer in this industry is doing. You will notice that Visa's service revenues base is much lower than that of American Express by looking at the quarterly revenues, right? Therefore, its growth in this segment will seem to perform better due to the lower base. And American Express does not have a data processing business, so we will not be able to compare this segment. In the international transaction revenue space, Visa seem to have a slightly larger revenue base compared to American Express. Their growth in this segment have also outperformed American Express by a large gap. Therefore, I believe that Visa has a greater exposure in this and its overseas markets as compared to American Express. Visa outstanding shares is also far more diluted compared to American Express at roughly 1.8 billion outstanding shares for Visa, while at American Express, it has only 700 plus million outstanding shares. So at current market prices, Visa's market cap is standing at current $436 billion. And Visa currently has a 9 months earning per share of $6. So this gives Visa a trailing 9-month PE ratio of 39 times, while American Express trailing 9-month PE is currently sitting at only 19 times. I'll break down more details of American Express valuation later in this video. So we look at management outlook. CEO Stephen Squeri is very pleased with quarter 3's 2023 stellar performance of American Express and is confident that the strategy put in place for American Express growth is beginning to pay off. The company's focus on capturing millennials and Gen Z is on track and grew 18% from a year earlier, currently representing over 32% of its new consumer portfolio. And its acquisition of Resi, a dining app, continued to pay off as CEO sees signups continue to grow significantly. Diner payments continue to be a large portion of its business in the third quarter. CEO also believes that this will continue into the next quarter, where diners will continue to eat out, especially after the COVID. He sees that growth in this sector, in the dining payment sector, will continue to grow even further for American Express. And as of recent, F1 has also become American Express official payment partner or sponsor, and this will further enhance the brand's goodwill to acquire new card signups in the future, fueling further growth in this area of business. Management has also reiterated that US consumer overall spending is still strong, and despite the macro headwind because of its high quality unique card member strategy, the portfolio is not fully impacted by the current macro headwinds such as interest rate hikes and inflation. Risk of delinquency is also well managed, and with capital requirements already exceeding that of regulators or regulations for this year by a huge margin. And 70% of its loans are responsibly offered to already affluent long-time customers of American Express that the company already knows well. In order for the business to grow for American Express, there needs to be a good balance in being able to capture a larger share of their customer revolving needs. So this is why I like how American Express tends to balance their businesses and reviews them quarterly by announcing them to the public. This is called good accountability. CEO reaffirmed on earnings growth in the region of 11 to 15%. So my financial year 2023 estimates have been adjusted to at least 10 to 11% growth, taking into account the Christmas holiday season. I've tracked American Express sales from 2005 up to its 9 months 2023 ended results, and American Express has shown resilience in its revenue growth and net profit margins since 2005. Net profit margins, however, shrank the most during the credit crunch of 2009 to 2010, from the double digits to just a single digit, which I've highlighted in yellow. However, net profit margins have since improved. The business environment for American Express that it operates is indeed very cyclical due to the sensitivity of its interest rate and consumer spending. But because of its large and resilient portfolio of its network, I feel that American Express has a defensive mode. 2023 9 months trailing net margins is now sitting at around 14%, and this has declined if compared to last year's 2022 net profit margin. Overall, net interest yield per card member remains healthy at a double-digit 11% if we compare this to third quarter 2022. But this net interest yield per customer yield have actually declined by 1 percentage point if we compare this result quarter on quarter. On the expenses front, bulk of the expenses come from card member rewards, which increased 6% compared to quarter 3 2022, while business development expenses was up 17% and card member services up 26%. This brings total expenses compared to quarter 3 2022 up 7%. Overall, expenses growth seemed to have slowed this quarter because of an offset in the 3-month period by the impact of changes in the expected rewards redemption behaviors of consumers. Management believes that there must be a right ratio for revenue versus redemption rewards costs, and management continues to be cautious and continue to keep the right balance, as great partners plus great rewards further adds to its brand value. Management has also reiterated that fourth quarter expenses will likely see a higher portion of marketing costs spent to acquire new customers, since the marketing budget balance of $5.5 billion still has plenty of room to be utilized for this financial year. We will likely see a total of up to 42% on cost over revenue for the full year ended 2023. For the balance sheet, provisions for write-offs continue to grow this quarter all the way into the fourth quarter, but this will likely be below pre-pandemic levels for delinquency rates. And as you can see on the right, so far delinquency rates have been constant and at manageable levels, according to management. I believe that the increase in its provisions and additional pressure in capital requirements by American Express has led the market to get spooked, causing the sell down of recent months. This is despite a good record earnings of the third quarter 2023. Its net return on assets seem to have declined drastically now versus 2025. This is many years ago. So from double digits during pre-global financial crisis period to a single digit currently. Latest net ROA is standing at around 3% versus 4.67% last financial year 2022. This is because it's likely due to the greater liabilities that AXP has taken on over time, but generated lower returns due to the higher expenses and write-offs as reflected, especially in this latest quarter. For the valuation, American Express current forward PE is at 14 times, and its median PE ratio is at 17 times. The industry PE is currently sitting at 8 times, and based on my revised PE forward valuation metric, American Express share price to me has been revised upwards at the $178 to $188 per share range. Overall, American Express, based on its PE, seems to be fairly bearish due to its fear of further rate hikes by the Fed, and I believe also flattish payment volumes going forward, and also probably because of the Delta Airlines rewards and redemption ongoing changes. and consists in the increased defaults and write-offs that have affected the share price. And comparing this to its peers, it's of course comparing this to the peers' PE ratios is of course very subdued in terms of its growth. So share price has been down from its previous high since announcement of its third quarter 2023 results. And based on my revised discount cash flow model, American Express is now priced upwards at a $77 billion valuation to me, or 1.4 times its forward 2023 revenue. I believe that at current market prices and resilient revised prospects of American Express, as mentioned by management, I believe that we can already accumulate and purchase more shares near to its current margin of safety with really decent, good upside. So in conclusion, after comparing with peers such as MasterCard, which is currently selling at 35 times its trailing PE, and Visa at 38 times its trailing PE, we compare this to American Express trailing PE at only 19 times, I conclude that seems to be a heavy sell down for American Express shares lately, making it seem attractive. As we note that the company's potential for growth based on its latest numbers is quite on disparity. So American Express, however, has to address its growing number of write-offs compared to a year before. And this will leave a dark cloud hanging on American Express already muted valuations, as I mentioned earlier. I may add more into my position as prices continue to drop for American Express. With such a unique and attractive business model and a long history behind the American Express brand, I'm confident that American Express can continue to ride its wave towards its long-term growth visions in a sustainable fashion. Despite the bad market conditions, okay, I wish that everyone have a happy bargain hunting moving forward. As we value investors now come out to hunt one other's fear during this volatile, choppy market situation. Good luck and see you guys in my next earnings episodes.